Alright, so here are my trades for the week ending October 9th. So right away, total combined is about $300 US net profit. And you see the first trade here was a Netflix put credit spread. Now these trades I opened last Friday for this Friday. So I opened last Friday because remember Friday was a red day. So it was the 490, 485 put credit spread. I did 2 contracts, and at the same time got into Adobe at 465, 460. Then I did an Amazon put credit spread as well at 3,002,995, and a Tesla put credit spread 385, 380. So all this was open on Friday, and I did 2 contracts on all of them. I think Tesla was about 30 points away. Amazon was a little bit over 100 points away. Adobe was 15 points away, so it wasn't that far. And Netflix was, when I got into the trade, it was 25 points away. And then on Friday, it closed at almost 503. So I was only 13 points away. Then on Monday, we had a green day for almost all the stocks. So I decided to get out of all of them because they were showing a decent profit percentage. So Netflix, I closed it for 45 cents. Could have closed it for better, but I closed it at 50%. So it was 2 contracts, $74 net profit. Adobe, I closed it for 45 cents as well, $73 net profit. Amazon, I was able to close it for 30 cents. I had opened for $1. I closed it for 30 cents. So that's a 70% profit. So that's 124 net profit. And then Tesla, I closed it for 35 cents. I opened for 91 cents, closed it for 35 cents. That gives me $96 profit. But then the market dropped again October 6th, I think because of the Trump tweet. So I got back into Tesla and Amazon, and I had an order on Netflix, but it didn't get filled. But I was able to get back in on Tesla and Amazon because of that tweet. So it gave me an opportunity to get back in on the exact same trades. Collected 90 cents on each. But Tesla, I closed it right away the same day for 56 cents. I think I closed like 2 minutes later. For some reason, it went back up and I saw a decent opportunity. So I just closed it right away. So that's a $52 net profit. And then Amazon, I think I closed it the next day. Yeah, I closed it at the open the next day for 45 cents, so 50%. And I made 74 net profit. So at that point, I think it was Wednesday, I was at 493 US net profit, so almost $500. I was pretty happy with that profit for the week. But then came Domino's Pizza, an earnings trade that I like playing earnings, out of the money put credit spread, same week expiry, October 9th. I went with a 407.5 short strike, collected 92 cents. So it was at expected move. And I have a video on this earning trade. But then Domino's Pizza, if we look at the stock or the chart of Domino's Pizza, you could see that it decided to do this over here. It decided to add almost below 400. It actually reached 390 the day after. 390, way below my short strike of 407.5. And dropped all the way down to 390.96 and then came back up. And then even on Friday, so today even worse, 388. It had a low today of 386.64. So it was pretty disappointing. So this was a max loss trade, but I actually got lucky. So it probably doesn't show here, but the next day it opened below 407.5. It even went to 400. But for exactly 2 minutes, it went to 410. So when it was trading at 410, I decided to take my loss. I decided to close the trade. So I booked it at $1.80. So I got lucky. I think I got really lucky that I was able to just close it for a smaller loss. So collected 92 cents, closed it for $1.80. And so that gives me a loss of $191. So because of that, I ended up dropping to $300 for the week. Kind of disappointed. I was kind of happy because I only did 3 or 4 trades, repeated 2 of them, and made a decent. I'm pretty happy with 500 a week US especially, but then this earnings trade came and destroyed everything, and it also obviously shattered my confidence and made me second guess earning trades because it's the second earning trades in a row that I lose a lot of money on. It could have been worse. That's the thing. This 191 is not so bad, but it could have been max loss. It could have been 800 easily. but the stock came up for just a few seconds and I was able to get out of it for a smaller loss. But I mean, CarMax destroyed me here, $800 loss. But thing is, Nike was a good win. Nike was almost 100% win. Opened for 83 cents, closed for 2 cents. So at the same time, sometimes earning trades end up being good. So I don't know, something I have to review, have to see if it's worth it or not. I used to do 30 days so that I have time to manage it in case it gets tested. But then I realized when I do 30 days, sometimes if it's the same expiry, it could end up a winner. But holding it too long, sometimes something else happens and the stock drops. So then could have been a winner if I had chosen the same week, becomes a loser because my expiry is 30 days away. Sometimes the stock doesn't move after earnings and there isn't enough volatility crush for me to close the trade because it's 30 days away. But when it's the same week expiry, if the stock opens at the same price, there's enough volatility crush to close the trade for a profit. So either I have to go back to 30 days, or maybe I just have to stop them completely, or maybe I just have to accept that sometimes I'm going to have to lose on these earning trades if I want to continue playing them. But I definitely could have made more trades. I was looking at Zoom. I was trying to get the best entry like I got on these ones, I believe. So sometimes trying to time the best price makes you miss out on certain opportunities. So I definitely could have gotten in maybe 1 or 2 more trades. Now Netflix ended up closing at 530, Adobe at 500, Amazon almost 300, Tesla 430. So what if I had placed my trades and did nothing and just let it go to expiry? Let's just see what would have happened. And what if I had done 2 contracts? So if I had done that, this would have been 0, this would have been 0, this would have been 0, this would have been 0. But I probably would not have placed these 2 trades over here because I'm already in them, correct? So these trades would not exist. And then this one, if I had let it go to expiry, this would have been a max loss. So that would have given me a total for the week of, I would have lost $121 if I had gone to expiry on everything. So for this given week, closing definitely did help. What if I treated earnings differently and closed it, but then my other trades, regular trades, I let them go to expiry? Then profit for the week would have been $518, would have been decent. So yeah, so it looks like going to expiries ends up being a winner, except for earning trades, of course. I'm not including these ones because I would not have opened them again if I'm already in them. Now, what if I did 5 contracts just for fun? My account can support it, but I'm just not ready. It's not in my risk tolerance. But what if I did 5 contracts on everything? Let's see what it would have given me. So I would have made a net profit of $13.40 for the week. So this is what's good about credit spreads is once you have a strategy that's consistently profit, once you want to add more money, it's easy to scale just by adding more contracts. But the hard part is finding a consistent strategy. And now just for fun, let's put 10 contracts. I don't see myself ever going there anytime soon, but just for fun, I think that would be my max. So that would have given me a profit of $27.10 for the week. So how much capital would that have taken? So each spread takes about $400 of capital. I've got 10, so that's 4,000. So 1, 2, 3, 4, 5. So 4 times 5 is 20,000. So that's about $20,000 of capital. So that's about 50% of my maintenance excess. So it could have worked out actually, but obviously there's the risk that if the trades were losers, then I'm out the 20K basically if I don't manage the trade and if I don't make any other trades. So that's always the risk with credit spreads, is that you could potentially lose a lot. I mean, this earnings trade could have been disastrous. So I still have that naked put on Rocket. Could have closed it today actually for about $1.60, would have given me about $1.20 profit for the week. But then it quickly dropped, and then I was able to close it only for $2. If I go to my account positions, you could see that it's trading right now for about $2. So I would have been able to book $84 of profit instead. So I'm going to hold on to it. Want to get some more decay out of it. I think under $1, I'd probably close the trade instead of waiting till November 20th. All right, so if you have any questions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share it with a friend, and subscribe to the channel. Thanks for watching.